Summer travel season is upon us. Airports could expect a 2% increase in passengers traveling this Memorial Day weekend compared to last year, according to AAA. But what is usually a booming summer season for airlines? This year it may look different as safety worries, economic concerns, and trade tensions create roadblocks for travel. U.S. airlines growing uncertain on growth prospects. How should investors navigate the sector? We're diving in with Yahoo Finance Playbook. Joining us, Bloomberg Intelligence Senior Aerospace Defense and Airlines Industry Analyst George Ferguson. George, great to chat with you. Thank you for making time for us. We've talked a lot over the years, you and I, about the luxury play when it comes to airlines, how they're seeking perhaps a higher income consumer. We were just talking with Brett Ryan about that here with us on set. Can these airlines continue to rely on higher income consumers to prop up their profits in this macro environment?
Yeah, so I think the answer is yes, certain airlines can still count on the high-end consumer to prop up earnings. It's going to be the big full-service United, Delta, and American. Look, there's a lot of competition, I think, for the basic economy, probably even premium economy travelers. So I think there's probably too much capacity in the market for the number of those travelers that are in the space. And so I would expect some discounting to fill airplanes. So I think the more you're focused on just premium economy and basic economy as an airline, the more difficult it's going to be this summer for you to make money.
I'm curious, George, what about declining oil prices, that dynamic, oil here at 61? How much of a tailwind is that for the industry? Yeah, look, it helps, right? So I think we were doing some math on this, recently. Look, I mean, fuel prices are 20 to 30% of an airline's cost basis. So, if they're down 10% or something like that, you're going to save a couple points on cost, right? Maybe 2% of cost. It's just not a lot. I don't think you can cut fares enough, given that extra wiggle room you got from fuel, in order to make a large difference. It will help, but really what we're still seeing is an industry where in 2Q and 3Q, based on consensus, not even my numbers, but based on consensus, expectations are for lower EBITDA, earnings before interest, taxes, depreciation, and rent, which is typically how we measure, and lower EBITDA margins. So not going to help enough.
Okay, so not going to help enough. What do you think moves the needle then? I know you sent over in your notes some areas where we could see airlines trying to be competitive when it comes to pricing. If they cut costs on, say, domestic flights, is that something that could be a little bit more impactful than lower oil?
Well, I think that's going to be what's driving the earnings number, right? Domestic business is the largest business for all airlines. And I think the discounting they have to do in domestic to fill airplanes, because you just can't fly, aircraft at 60 or 70% full. You'll never make money that way. So you got to discount them to get them up into the 80s plus percent. I think that discounting is what's going to hurt earnings. We still see international as being relatively strong for the summer season. I think really you get a pretty long booking curve for folks going international. So, right now the euro is sort of working against that traveler, but they didn't see that in the beginning of the year. And so I would still think demand is pretty robust across the Atlantic, at least for the first half of summer. And that will be a nice support for earnings. I think we're going to see whether anybody's starting to change their mind on Europe. It's been very U.S. point of sale. We'll see if everybody's starting to change their mind as we get into 3Q. My guess is you could find some. It may not be enough to create a lot of softness in Europe. So I think that's still a strength this summer, and that's what's part of the tailwind for United, American, and Delta.
George, I'm curious to get your take on another issue, too. These headlines we see out of Newark, George, these reports, they get a lot of attention. We were talking to another airlines guru like yourself, George, and he was making the point that these issues, air traffic controllers and air traffic, control system that needs upgrading and modernizing, his point to us was it is way beyond Newark. It is way more pervasive. Is that your sense, George?
It is. So, we have the air traffic control system that we've invested in over the past couple decades, and it's prevalent around the system, right? And so these aren't new. I think they tried to fix Newark by moving some of the control, not so much for the field itself, but airlines coming to and departing from Newark into Philadelphia. The FAA is having some staffing problems, which is making Newark relatively acute right now. But I would tell you that most summers we have problems at Newark. Weather usually creates it. This time we're down a couple controllers. It doesn't help. But some of the cuts I'm seeing out of Newark United, I think, cutting less than 1% of their total capacity. In a lot of cases, they'll just merge some of that flying with other routes. I don't see it having a big effect on earnings. But again, Newark's going to be a pain flying into and out of the summer. But frankly, I'm a Newark flyer. What year isn't Newark a pain to fly in and out of? So it's a little more acute this year.
George, I'm right with you. Another Newark flyer. We'll get delayed together, George. It'll be fun. We'll catch up at the airport. Thank you, sir.
To it.
Thank you, as always, for joining us. Appreciate it.